Hi there, it's James. I've just got back to the office after a road trip and I've got my Bitcoin pizza hat on. And there's a story about Bitcoin pizza and the fact that someone paid 10,000 Bitcoin for 2 pizzas. The story's in the description. Actually, it's a story I didn't know myself. So I met some Bitcoiners down in Plettenberg Bay in South Africa, down the coast, and we talked about stacking sats and the Lightning Network and cold wallets, cold storage, and all that sort of thing. Pretty interesting. We also talked about circular Bitcoin economies blooming and blossoming all over South Africa, and I met some of the protagonists of the Bitcoin revolution in South Africa. So I'm going to take this off now and straighten my hair and get right back to you. I'm not much of a cap wearer, so let's get back to the markets instead. And whilst we're talking about Bitcoin and crypto and so on, let's talk about what we've got on the charts here. It's Memorial Day tomorrow, so there's not going to be a lot going on, and some of the markets are closed, including the stock markets in the US and so on. So it could be a bit of a quiet day. Most of the foreign markets are open though, including markets like Bitcoin, currency markets, of course, and a couple of the futures exchanges. So given that today and tomorrow might be slow, let's have a look at the markets anyway, and I'll just do a brief update as to where we are. First thing I want to look at is Bitcoin. The markets came off yesterday on Friday after the EU tariffs and the Apple tariff story. And along with the decline in the stock markets, although they did bounce a bit later on, Bitcoin also came off. But look where we dropped to, down to this trend line. And I pointed out this trend line on Friday. Look where the 20-period moving averages and the trend line. And we've got this horizontal line here at $100,000. That's obviously a key support, psychological support, and I've covered this in quite some detail in last Friday's video. But we bounced off the trend line just around about $100,000, and then on Friday, we dropped right back down to the trend line again. I added another new small tranche of Bitcoin over there. The 20-period moving average is just below. There's the trend line. Both of those are supportive, and of course the $100,000 psychological level where we found support before. I don't like this bearish engulfing candle in Bitcoin, and it's a tweezer top as well. And if you look at the size of that bearish candle on Friday, it's the biggest really since about April the 6th. So big decline, but down to the trend line. Can we find support? We've got a little bit of an inverse hammer candle there, and it's potentially possible that we could form a sort of a spike low tonight or tomorrow, making a one up, one down candle pattern. As long as we're above $100,000, I'm feeling quite comfortable with Bitcoin, even if we do break this trend line, and I suspect we probably will try. And then, of course, we've got further support below us. We've got the big Moab breakout, this red line down at 89,000. I hope we don't have to get back down there. And if we do have to have some sort of mean retracement, we could drop down to the 50, the 200, and the 100-period moving averages right down here. If you're looking to accumulate Bitcoin, there are 2 key levels that you might consider. First of all, 100,000. That's that flat bottom over there and the big psychological round number. And we've also got a level here at about 93 to 94,000, another flat bottom support. Also against the trend line on that occasion as it was there. So we're dropping back down to that trend line now. We don't have space to go sideways because we're right at the trend line. So we're hoping for a bit of a bounce here. But I suspect we may try and retest this 20-period moving average and the $100,000 level. And in the worst case scenario, for those who are day trading or swing trading this, we may have to get down to about 96,000, or even at the extreme, and I hope not, just below 90,000. Let's see how we go on this. I think, though, now that we've broken above the previous all-time high double top, which was a very, very significant resistance, that we may just try and hold here. Bear in mind, though, even though we have made a new high, there's every possibility that that could be a slight false breakout, and we may have to retest the levels I mentioned earlier. So that's Bitcoin. I'm not going to talk about Ethereum or XRP right now, but we're long on both of those as well, and they'll basically just follow what Bitcoin is going to do. More interestingly, down here on gold, we're still short. Now, I haven't added any more short positions on this just yet, but we have one from up here at the 78.6% fib, and we have one down here. We've now retraced back up to the top of this order block and the 61.8% Fibonacci level. My overall picture remains the same, a move down to about 3,000 and potentially down to about 2,700, 2,800. So I'm looking for a top on gold somewhere around about where we are right now, or at the 78.6, or even a slightly higher high before a reversal down to these levels. Remember, this is a counter trend trade, and trading against the trend is particularly risky, and we don't know if we're going to get this pullback. So in order to offset that risk, I've also got a long position on silver. There's our entry position on silver. That's moving into some profit, and these are roughly equally sized. So whatever happens on gold, silver should roughly follow suit. But it's interesting we've managed to take profit on long silver positions and on short gold positions simultaneously twice over the last couple of weeks. Will we be able to do the same again? I don't know. We'll have to see how this works out. We've also taken a long position on copper, and this is an interesting play. And for all love of money, it looked like we're in a bear flag here, moving down below all the moving averages that count in the short term, the 50, the 20, but bouncing off the 100 and finding support there. There's the 200-period moving average just below. We did have a big spike down with Liberation Day. Thank you very much, Donald Trump, just down to that support level. And it's a pretty key level, as you can see now. If we continue to hold the support here and we don't break and close below it, there's every chance that copper can make new highs. So we're long on copper, long on silver, but short on gold. And there are those who are saying, well, you're doing exactly the opposite of what you should be doing. But so far it's worked out pretty well, and we're in profit on all three. So let's see how we go. We'll have to sort of juggle these as we go along. Now I want to go across quickly to currencies and show you what we've got on. As you might know, if you've watched the previous videos, my target for the dollar index is down at about 93, and we're heading down towards that direction. We've obviously got to break below 98 and the lower 200 period Bollinger Band, but the target is way down at about 93. You can see how we've got this Dixie Moab, which has now been broken, pierced, and we've closed below it a number of times. Even though we've bounced back up, we've only met the 50 period moving average. And we had this big false break clear out before that, which has now forced the price down. So if we zoom out on the dollar index, you can see where my targets are. We've got a big order block down here and the lower 200 period Bollinger Band on the dollar index weekly chart. That's my target down here at 93. We're currently trading at 99. So that gives us a 600 pip move down. And if I apply the same to the euro, which is the sort of most direct correlation with the dollar index, we should add 600 pips onto the current price. We're currently trading at 1.350, and if we add 600 pips onto that, that takes us up into the next levels, which I've got drawn up above. Let me just squeeze this chart up. First of all, the 78.6% Fibonacci at 1.18, and then 1.2, which would give us 600 pips from where we are. So let's just zoom out a bit again and see where we are. We've got two positions on, one from there and one from there. You can sort of pause and check out those levels. And we're in profit on both trades right now, so that's all looking pretty good. We took another position on Friday and we went long on the Aussie dollar, bouncing off that level there and looking for this inverse head and shoulders pattern to take us right back up to 0.69 and potentially 0.7, slightly higher than that high. And then the only other position that we have on is the euro yen. We're short on that one and looking for a move down to about 144. I've explained this plenty of times in multiple videos because we've literally been going sideways across the page. Nothing's changed. Basically, it's a bull run, flag pull down, bear flag for a very, very long time. And then this move here is a measured move, equivalent to the size of the original flag pole on the way down. So three positions, long on the euro, short on the euro yen, and long on the Aussie dollar against the US dollar. Going across the stocks now, Friday was a bit of an interesting day. As you probably know, we're short across the board on stocks now. I'll go through these positions quickly. We're short on the NASDAQ. I believe we're still in a bear market until proven otherwise. A break through this top might negate that. We're also short on the S&P. You can see my positions on all of these charts. Just above the 78.6% Fibonacci, we sold near the top there, and it's moving down quite nicely. As I said on Friday, we moved down on all the indices, but just bouncing off the 20 period, the 100 period, and the 200 period moving average, providing firm support there. It'll be pretty difficult for the market to get down below those levels on the S&P, given all of that support. And also on the NASDAQ, we also moved down towards these moving averages. That trend line, which is actually part of a very, very long-term channel, a neat long-term channel. So we're now firmly back in the channel, and notice all of these moving averages once again, the 20, the 200, and the 100, all providing incredibly powerful support, I imagine, and also the channel bottom that we're bouncing off from the inside. My target for the NASDAQ, initial target, is down to about this level and then much, much lower. And in fact, on the S&P, I've got a target down into the 3000s, believe it or not. Let me just show you on the weekly chart, down towards these lower levels, the lower 200 period Bollinger Band, and also these swing lows. And that's well down into the mid 3000s. That is, of course, if we're in a bear market. There's more stuff I put up on X showing how we often and should do at some point reach the lower 200 period Bollinger Band on the weekly chart. Go and check that out on X. We're also short on the German 30 for similar reasons and very, very near that channel top. This is actually a much neater and easier pattern to recognize, bouncing off the channel top. Even though we made a new all-time high, we just reached the channel top. On Friday, we sold off on the German 30 as well. And once again, pretty similar to the NASDAQ and the S&P, we bounced off the 20-period moving average. But we're far away from the 50 and the 100 and the 200, unlike the other two indices. And then one really good play, and I'm pretty pleased about this. I was a little hesitant to get into this trade, but we also sold MSTR, not knowing that Bitcoin would sell off as it has done. I was looking to sell up into that level over there, just above the 78.6 like the indices, but we formed a double top just against the 618 fib, and we moved down on Thursday. I got short there, we broke and gapped down below the 20-period moving average, and we're moving quite firmly down. So my target for MSTR, and it all depends on what Bitcoin does, is probably just a fairly short-term hedge down to this sort of level here, where the 50 and the 100-period moving averages are, but I'm allowing for a move down to the 200 and this sort of level over here at about $300, just below $300 perhaps. We're currently trading at $368 and we got short at $400 round. Quite a cool trade. And we've got a short position on QBTS, but well, it's looking okay. We actually got long on this, on that gap up, and we reversed at the top here and went short. So my target on QBTS, the quantum software company, is back down to the top of the gap, then the bottom of the gap, and then the channel top around about here. At that point, I'll look to exit the shorts and reverse once again. So we went long, took profit, went short, and I'll look to exit at the bottom of this gap and or the channel top. Notice how the 20-period moving average is curling up and the 50 and the 100 as well. Once again, this is a counter trend play, but I'm just using the profit from the long trade that I took in order to get short, in order to rebuy at a better price a bit lower down. So that's it for stocks. We've covered metals and currencies. Let's have a look at energies. Of course, the big question is what's going to happen with natural gas in a few hours' time when the market opens up again. We'll have a look at that shortly. But we're long on URA. That had just a magnificent move on Friday, uranium. And I put this up on X as well. There wasn't time to put it up in video because this happened so quickly and so fast. Massive gap up, followed by a huge rally on URA and also on UEC. So you can see our long position from way down here, just above $20. We're now trading at 31. That's a massive move. And the same with UEC. UEC took a little bit of time to get going, but the same sort of picture. We're long from down here at about 471. We're currently trading at 645. Big gap up there. We may have to revisit those gaps at some other stage. We did break above the 200-period moving average. We've got 2 order blocks above us. My targets for these are much, much higher. And notice on URA how far above all the moving averages are compared to UEC, which has only just got going. Right, now let's look at natural gas. We went short on natural gas on the contract roll. We're no longer in the continuous price. And I'm going to do another separate video on natural gas tomorrow, but I just want to update you on my positions. We went short here at about 3.69. Now let me zoom out. We have a bit of a trend line here, which I've drawn in. It's not the best trend line. It's only got sort of 2 touches. This will be the third. We did probe through it slightly, which is a bit of a concern, but we're into this order block, and my general idea is that we'll trade between $3 and $4 for the next foreseeable future, perhaps into sort of the end of the year. So we're currently trading nearer the top of that right now, so I'm looking for shorts for us to get back down to $3. My first target is this market structure break at about 3.54, and then I'll be looking for a move down to about 3.24, 3.25, and then down towards the $3 level. Now, my broker rolled over on Friday. The Henry Hub only rolls over next week, but we've rolled over a little early on this. You can see on the day chart, we're right at the 100-period moving average and this little trend line that I just drew in, and that order block, which is very, very similar to the order block on the 4-hour chart, which we were looking at a little earlier. There's the order block on the 4-hour chart that we've just probed into. Bear in mind, this is not a big bullish candle, by the way. This is the rollover candle. It's actually a gap. It's not an actual candle. But you can see we probed into that order block on the 4-hour chart, and on the day chart, as we just saw, we're just slightly below it. So we could get up to the top of this order block and that previous swing high at about 3.75, 3.8 before a move down. Now, it is possible, of course, that natural gas could keep moving higher. Bear in mind, once again, that's not a candle, that's a gap. It's just the way my broker shows it on the charts. So allow for a move into this order block, and at the extreme, and by that time we'll be hedged, of course, we might get even higher into this much bigger order block. Targets down here at 3.5, 3.25, and the 200-period moving average, and then the $3 level, perhaps slightly below actually, because we did probe down below the 200-period moving average down to about 2.95, 2.96 in April. So let's see how we open up. Of course, these are all well-set plans, but they'll all change, of course, if the market opens up with a dramatic gap up or a gap down, whatever might happen in the next coming hours as the market opens. Bear in mind, of course, it's a holiday tomorrow, Memorial Day, and some of the futures exchanges are closed, as the stock markets are too, but the currency markets and some of the other markets are still open, and some of the future exchanges are open for half a day, including the NYMEX, where we trade natural gas. Quickly looking at crude oil, whilst we're on the same chart, I believe we've got a new range between $50 and $70, and I'm looking for the move down to about $50. We just went short on Thursday after that spike high up towards this order block, the moving averages, and my blob, which I had drawn in as my first selling area. I'm allowing for a move back up into this zone here where we have Moab situated, and also at the extreme, a move up to the top of the channel. By that time, we'll be hedged, of course, perhaps. We only have a relatively small position on this so far, but we're looking for a move down to these sort of twin lows here, double bottom, and then a break below there down towards about $50, where we should probably pause again. Don't expect sudden, dramatic, directional moves on oil. We never get that. It's a zigzaggy sort of market, so these things take time. We might have to go sideways. We might have to get back up into the blob at Moab. We may even have to get the channel top first. But overall, my direction for crude oil is downwards. And then softs and grains, I'm not too sure how many of these exchanges will be open tomorrow, but they'll all be closed by lunchtime, New York, so Probably not a lot of movement there. Most folks are on holidays, especially the fund managers and the banks and so on, so they won't be doing a lot of trading. And then quickly looking at the VIX, sort of faffing around, a bit of a spike up on Friday because of the new announcements for tariffs in the EU and Apple and so on and so on. Whether anything will come of those, who knows. Also, the South African Rand continued to strengthen on Friday, inexplicably so in my opinion, and we're still long on that one, and we may have to hedge it. Treasuries barely moved on Friday, just a tiny little sort of full stop candle. That doesn't really mean anything, but we do have a piercing pattern there and looking for a bounce on that, so that could be okay. And then the 10-year yield, we know that the 30-year yield and the 20-year yield are going gangbusters, and this one actually just moved down a wee bit on Friday. So not a great deal to say on this, although we do have a dark cloud cover candle, and we have not yet closed above that previous tariff whipsaw high. So who knows, perhaps we'll see some recovery in treasuries. And that's it, folks. I'm just going to scan through these charts to see if there's anything I missed, because sometimes I just leave things out and people say, well, what about gold? What about oil? What about this? But I think I've covered everything so far. So thanks for watching, folks. I hope you had a great weekend, and good luck for the trading next week. If you're trading natural gas, I might see you on X if there's something weird that goes on a bit later on tonight. And I won't be wearing my Bitcoin cap in my videos anymore. So if you did enjoy it, make a comment, or if you didn't like it, make a comment there too. Read the story in the description. Make sure you like, subscribe, and join the channel for $1 a month. And I'll see you on the inside. Take care.
Yeah, that's a fake out, baby. But I caught it on the wick. Check a check. Twack, whack. Yo, she's trading meme coins at 3:30. I'm scalping breakouts off BTC. She's got hype, I got my edge. Trend line bouncing off my fib retrench. Wick to the downside, baby, I'm there. Snipe that entry like a Boston flared hair. No guessing, no stressing, I trade with poise. Volume building like disco noise. Yo, you that trader, Wick Hunter, baby.